They engineered the app to feel effortless. That's not an accident, it's the trap. We call it frictionless investing. But every tap they removed was a barrier your brain needed to think before you spent. This is the psychology behind the casino they built in your pocket, and the exact behavioral scaffolding you need to take back control. For decades, Wall Street was an exercise in exclusivity, limited to the wealthy or institutional insiders. Today, the entire global exchange fits right in your pocket. A few quick taps, and you're an investor. This chart tracks the volume of high-risk asset purchases. Researchers found that when retail investors trade on smartphones, their purchasing of speculative, lottery-type assets is drastically higher than when they use a desktop computer. The underlying market hasn't changed, yet the physical device you use alters the assets you buy. This is the cycle of payment for order flow. Many zero-fee digital brokerages generate revenue based on your trading volume. The more frequently you buy and sell, the more money the platform makes. Your brokerage app functions as a highly engineered choice architecture, a digital environment designed to drive impulsive trading at the expense of your long-term wealth. The psychologist Daniel Kahneman mapped human cognition into two distinct operating modes. He called the first one System 1. It is fast, automatic, emotional, and relies heavily on mental shortcuts. System 2 is slow, deliberate, and analytical. This mode requires intense cognitive effort, which is why managing personal wealth or evaluating risk strictly requires System 2. Historically, investing had physical barriers. You had to call a broker, read paper charts, or navigate clunky interfaces. That natural friction slowed you down, forcing your analytical System 2 brain to engage before you committed capital. Modern platforms eliminate those barriers. Account creation takes seconds. Executing a trade takes milliseconds. By stripping away that friction, mobile apps bypass your deliberate System 2 brain, accelerating your descent into the emotional, speculative vulnerabilities of System 1. This graph maps a principle called loss aversion. Notice the shallow curve for gains compared to the steep drop for losses. Humans feel the psychological pain of losing a dollar twice as intensely as the pleasure of gaining one. Frictionless apps weaponize this biological quirk. By keeping your daily portfolio balance on the home screen, they ensure you feel the pain of every minor dip in real time. That constant red visibility triggers a primal threat response. Retail investors often sell off assets at exactly the wrong time, just to make the psychological distress stop. Once you enter panic mode, you look for safety in numbers. Humans are hardwired to mimic the crowd, especially when we feel uncertain or threatened. Platforms exploit this through push notifications, claiming thousands of people bought a specific stock today. These urgency cues bypass your logic and trigger a fear of missing out. When you cave and buy in, the app rewards you. A burst of digital confetti lights up the screen, triggering a dopamine release right in your brain's reward pathway. This combination of engineered panic, manufactured urgency, and dopamine loops transforms serious financial markets into an addictive casino-like game where the house always wins. Digital convenience is often a trap. If an application makes a financial action completely effortless, it usually serves the platform's bottom line over yours. The antidote is positive friction. This involves deliberately designing speed bumps into digital interfaces to slow down human decision-making. We see this ethical design in certain AI-powered robo-advisors. They default users into passive, diversified portfolios and purposefully bury the daily balance screen to protect investors from their own loss aversion. For active trading, positive friction means forcing a 20-second delay before executing a trade, or requiring you to watch a simulation detailing your statistical probability of losing money before the buy button activates. Until regulations force these platforms to adopt ethical choice architecture, retail investors are on their own. You must build your own behavioral scaffolding. This often means deleting frictionless brokerage apps from your phone and restricting your trades to a desktop computer. This physical barrier forces your System 2 brain back into the driver's seat. True financial security depends on your ability to design an environment that outsmarts your own worst psychological instincts. If this exposed how your trading app is engineered against you, subscribe. Every week, we break down the systems designed to extract your wealth and the tools to fight back. Drop a comment. Are you still using the mobile app, or have you already built your own friction?